Good morning. I'm Jenny Ray LaRue here on the Market Outsiders podcast. Excited to be with you. Today is Tuesday, July 22nd, and it is the first day that I have a teenager who lives in my house. So I'm pretty excited about the day. We have fun things planned. Have loved hearing some of your suggestions about what to do for big birthdays. I just think that birthday traditions are so special. It's one of my favorite things. So really looking forward to today. I'm here with my co-host Namaan. Namaan, how are you today?
I'm doing well. I have my Dunkin' coffee. So if you listen to the last episode, I was not caffeinated. I'm caffeinated today, so I'm ready to go.
Awesome. Well, hey, Noam, let's kick it off. We earlier this week, one of the things that I think is interesting about what we do here is that we sometimes talk about what's in the market, but an outside perspective, and other times we talk about what's outside the market. And today we're going to talk about another company that is in the market, but I think in really interesting kind of fashion is a part of the ecosystem that we were talking about earlier this week on Pepsi. So I'm just going to start with what I think is kind of a vanilla version of the article, and then I'm going to talk about what gets us a little bit further into that. So let me just share my screen here. We're going to talk about a tried and true Coca Cola this morning. So, Naman, you're caffeinated, but you could have chosen other things. That's going to be part of what we're going to talk about in this conversation today. Right? Coca Cola earnings beat estimates as strong demand in Europe helps offset weakness elsewhere. So, one of the things that we've been talking about here is that you have to make sure that when you read a headline and it says beat estimates, it doesn't mean that the company is growing. It doesn't mean that the company is outperforming. So when you read that on Nvidia, it does because Nvidia is growing in a growing market. When you read it on something like Coca Cola, it could mean something super different. So we kind of teased that out in pretty great detail. You can listen to the episode that we just did on PepsiCo last week if you want to have some more insights on this. So, Naman, let me just kind of walk through a couple of the key points, and then I'd love some of your kind of here are the things that I would love to know questions, right? So Coke topped Wall Street's estimates for its quarterly earnings and revenue. The company reiterated its full year forecast for organic revenue growth and narrowed its outlook to the top end of its prior range for comparable earnings per share. And then, right, this is one of the interesting things that we didn't see with PepsiCo. Shares of the company fell less than 1% in pre-market trading. So just at the high level, Naman, how could that happen? They beat estimates. They have, expectations of coming in toward the high range of where analysts are, and the shares fell. Right. This is something that I feel like if you guys haven't been following us, you need to understand how we would reason through something like this. Can you just walk us through what might be going on here?
Yeah, so either you didn't beat expectations, as much as investors hoped, or what's more likely in this case, I think, is the forward guidance was murky. And so it might not have anything to do with the like last quarter's performance. It might have everything to do with what Coke's saying for the rest of the year. And I think a part of this is what Coke is saying is that they're going to introduce cane sugar like back into Coca-Cola for like US drinks. And that is more expensive than high fructose corn syrup. And, if you kind of look at the sugar market, like we don't even domestically produce enough sugar to like put it in all the Cokes that are sold in America. And so I think what the market is saying is, okay, you beat last quarter, that's great, but some of the decisions that you're making make it less likely that you're going to beat in the future. And so as we've talked about multiple times on this podcast, the stock price is really the expectation of future earnings. It is not reflective of past performance. And so it makes a lot of sense to me why shares would be down this morning.
Great. Well, one of the things that I think is interesting if you go into a deeper dive on Coke this morning, and by the way, we're not going to go into such a deep dive because we did a really like poll, a big poll on PepsiCo earlier. But the Coca-Cola business did a lot of the same things that PepsiCo did without some of the backlash, which is part of the kind of Warren Buffett thesis on Coca-Cola, that they have a very different kind of customer base. So if you kind of look at a few of these things, right, you can go through some of the mechanics of the details. Net sales rose 1%. The organic revenue, and that's, by the way, important, right? The net sales did rise, so it was an increase in the business, not a decrease, that just happened to beat expectations. Their organic revenue increased 5%. but Coke's global case unit case volume fell 1%. Okay, so how did they beat on revenue if their unit case volume fell? Price
Price.
increases. Yeah, exactly. So they pulled the price lever. And so in North America, volume fell 1%. Latin American unit case volume decreased 2%. But Coke's Asia Pacific market saw 3% drop. So outside of the US, they're seeing even bigger headwinds. And so I think that's also particularly interesting. Right, the sparkly drinks segment was interesting, but actually more durable. You can see here the volume shrink 1%. The company's other businesses, which have actually been powering growth for the last couple of years, juice, value-added dairy, plant-based beverage division, saw volume fall 4%. And then water, sports, coffee, and tea segment. This is, things like right, Powerade, I think Rae and Namaan is one of their portfolio companies.
Hmm. Hmm.
Um, right, coffee would be like other kind of, packaged coffee drinks. Tea segments fell, and then growth in coffee did offset decline in sports drinks. So you're drinking Dunkin' this morning, right? So, anything that you think of in the cold brew category, anything that's in kind of some of those sectors are super important.
Hmm.
So, Naman, you want to kind of reflect on any of that as,
Well,
as we're
yeah.
talking about that, and then I'll kind of do a final deep dive onto, why are we losing out on estimates?
Yeah, so you asked me at the beginning, what would you look at, or what are the questions that you would ask? And this article kind of starts to scratch the surface on those. But really, when I think about CPG, I really think about two distinct questions. Number one, like where's the category growth and where's the category decline? And then number two, where's the geographic growth and where's the geographic decline? So I think that what you see here is like big picture. Okay, volumes are falling everywhere but EMEA. But what I'd really want to know is, okay, what is like the revenue and the unit change per category per geography. Like that's the very specific kind of level of metrics I'd be wanting to get to so I could figure out where my problems actually lie. Because here you're seeing like global volume shrinking in like juice, dairy, and plant-based beverages, but you don't actually see that per geography. You're like left here to like try to connect some dots between kind of like the geographic volume decline that was also talked about earlier, and then the category volume decline here, but like no one actually like overlaid those on top of each other to give us like a fuller view of what's happening where. And so that's the next thing that I'd want to do. But this isn't surprising to me because I think there's actually more competition in juice, in dairy, and plant-based beverages. We talked last week about challenger brands, and we talked about them specifically like in salty snacks. But you're also seeing challenger brands in like plant-based beverages and like some of these like dairy beverages. Like Coca Cola has a moat around it and a brand strength around it that like coconut water might not. And so it makes sense to me for multiple reasons why
Yeah.
you're seeing higher volume declines in that segment versus your like soft drink segment.
Naman, are you mad about the cane sugar? Are you happy about the cane sugar? Tell me.
I mean, to be quite honest with you, I really don't drink a whole lot of Coca Cola anymore, any soft drink, but I do prefer the cane sugar version to the high fructose corn syrup version. Don't tell the corn lobby I said that. But so if I'm going to opt for a Coke, it's probably going to be the cane sugar version, but it's not a big part of my life.
We serve Mexican Coke at our winery. You can actually buy it in our local grocery store. It's a big seller for all of our non-alcoholic drinkers, including kiddos. And so, it'll be interesting to see. The Mexican Coke is priced at a pretty significant premium, but I've always wondered if that's because of supply chain issues, just because it's produced in Mexico, getting it into the US or if there's something else going on. So I know that that Coke with cane sugar will be more expensive, but I don't know if it'll be kind of at the same scale as that. So, but I also don't drink it, but I also would be. I'm just interested in the business dynamics of it. Naman, I know that you have a hard stop today, and we're going to have a short episode in general. But I just want to tag on to kind of one other thing. And this was kind of another headline that I saw, but this one is kind of exactly where we would kind of post in that Coca-Cola earnings beat estimates, why the stock is falling anyway. I think if you want to kind of really probe into what's happening with Coke, what's happening on the macro scale, there are other really valuable factors here. And I can imagine if you're preparing for a case interview, or you just want to have something to chat about when you're sitting on a train going somewhere and somebody's chatting with you about business, this is something that you might want to understand. Coke is impacted by tariffs for the same reason that my winery was impacted by tariffs in the bottles and in the, especially for Coke, aluminum, right? So aluminum tariffs have risen very significantly. Alternative packaging is not like the only option for something like Coca-Cola when you're thinking about a supply chain as complex and interwoven as theirs is. And so they have cost increases. Those are getting passed on in price. As you can see, there are some durabilities in the way that the stock has performed in price increasing environments. But if they're considering these kind of new pricing changes to be near the top of where consumers are able to handle them or interested in handling them. If that's what they're seeing in terms of some of the volume fall off, then that's different than places where Coke has been before. Often when Coke has gone through a price increase that has increased the stock and increased the value of the business, but it hasn't dampened revenue. Unlike Pepsi, because you're really seeing with Coke, the beverages business exclusively, you're seeing here a pretty durable beverages business. But you are really seeing some of these challenges going forward, like Naman said earlier in the business. So looking at information just like this, right? Why would they beat estimates but see a stock price decrease? You have to understand the mechanics of time as well as the mechanics of both the cost and the profit side of the business. And I happen to think that Coca-Cola is a phenomenal way to do that because we often have had experience with the brand. We understand how the brand merchandises and advertises. We understand pieces of how it operates in general, and there's a lot of opportunity here. So, with that, we'll keep it short and sweet today. Thank you so much for joining. If you have a business like Coca-Cola or a headline that you want us to tease out here on Market Outsiders, we're all about understanding the business dynamics and the second and the third order insights that really get into where we need to go. From a business understanding perspective, so that you can begin to connect the dots in your own personal business and investing life as well. Have a great Tuesday.